Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to talk about share buyback, stock splits, and all the crazy stuff that's happened over the month of March, because there's a lot going on, and it's probably a good thing, maybe a bad thing. I don't know. Depends on how you look at it. It might be some new information when it comes to stock splits, share buybacks. If you don't know what that is, we'll talk a little bit about that. Just give you kind of the breakdown of that. But if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. But as we do, we will give you an update on the portfolio here. So today, the portfolio closed out at $11,647.14. On the day, we were up $27.22, up 0.23%. For the 1 week, we are down $30.51, down 0.26%. For the 1 month, we are up $170.55, up 1.49%. For 3 months, we are up $285.04, up 2.51%. And for the 1 year, we are up $1,737.76, up 17.54%. And for the all, we are up $2,325.61, up 24.95%. So that is the portfolio starting at the beginning of the week here. And then next video, we'll talk about our dividends that we received for the month of March of 2022. We're going to talk about a few things. First, we're going to talk about stock splits, because there has been some news that has been floating around, not been floating around, but has been approved, I believe, in one or more cases. So Google's doing a 20-for-1 stock split, or the parent company of Google, which is Alphabet, is doing a 20-to-1 stock split, not a sock split, a stock split. And then Amazon is now doing a 20-for-1 stock split as well. If you haven't heard the news about that. That is one company I did not think would ever do one, ever, which is Amazon. I really didn't, because their last one was done in 1999, which is way before I could even knew what a stock was. Way before. And so what does that mean? It means absolutely nothing. It means absolutely nothing when it comes to the company fundamentals. The company has not changed in any ways. The company's not splitting up 20 ways. It does nothing. However, currently in the marketplace, every time there is news about a stock split, the stock of the company, the price tends to rise. There seems to be a flock of investors that come in and maybe not understand. Maybe there's a euphoria that happens when a company announces a stock split. I know last time it was really new to a lot of other people was when Tesla announced a 5-for-1 stock split, and at the time Apple announced a 4-to-1 stock split, which was, I think, a couple of years ago or last year. And so now one of the largest companies, two of the largest companies, are doing that, which are doing a 20-for-1, and that is massive. It doesn't mean anything has changed with the company. Nothing really has changed. The only thing that is a bit different is maybe within the company there is going to be some better stock options for employees of the company. That's the only thing I can think of. And it actually gives retail investors like yourself and I the ability to look at the stock price and have less friction when it comes to purchasing that stock. Because I know we take a second look at things when prices are higher, especially in the stock market. I don't know why in the luxury goods market everyone doesn't care and they just spend thousands of dollars. But for some reason, there's a mental game that happens when you're looking at the stock of like Google or Amazon, and you see the $2,000 or $3,000 price tag of the stock. And for some reason, we think price tag and we don't think value. And so when a stock split happens, all of a sudden everyone wants to flock in and get the increase that'll happen when a bunch of investors come in and start buying it up. I don't know what the mentality is there, but when the stock price for Amazon is like $150 based on a 20-to-1 stock split, it's a bit more attractive to investors who've been wanting to get into Amazon but don't want to fork over, $2,000 or $3,000 for a share. but it's much easier to buy a $150 share. So it's just a mind game essentially, but nothing has changed fundamentally with the company. The company's not doing anything different, maybe other than these stock options for employees in that sense. So could you imagine if you're just working in a warehouse? I don't know how much they get paid in the warehouse, and then they offer you like 5 stocks of Amazon. Like that's a lot. That's $15,000 roughly, I think, in US. So if you can imagine it being like that, but really a stock split does nothing of the sort. The stock is just splitting up 20 ways, and it's just really diluting the amount of stock that is out in the open market. So just wanted to clear that up. So don't be too excited that there is a stock split. I am, for myself, I am excited because now, you know, I wouldn't want to spend that amount of money just to get a stack of Google shares of the sort. So it is somewhat working in that sense, but don't expect it to like shoot up just because there's a stock split. The other company that is doing a stock split is Tesla. Now they filed to do one, but it's not actually I don't think it's a total stock split, or if they don't approve it, if the SEC doesn't approve it, or they can, I think he had a stipulation there where it could be a stock split in the form of a dividend. Now, a lot of us are probably thinking a dividend payment of they're going to pay us on a monthly basis, but no, that's not the case. In what I think Tesla is trying to do is, let's say for every stock you own of Tesla, they will give you another one, but only for owners of the stock. Okay, so a stock split in the form of a dividend or an actual stock split, but we don't know if that's actually been approved and moving forward. I'm actually not sure. Other than that, that's pretty much it. So there are different kinds of splits that happen. There's also reverse splits, which we won't talk about because I don't have any companies that would do a reverse stock split, to be honest with you. They're typically really, really small companies that are not surviving and are at the risk of being delisted from an exchange. And so they reverse split to inflate the price of their stock and are able to stay on that exchange. So a bit more complex stuff, but we won't talk about that. Share buybacks is the next thing I want to talk about. Share buybacks are super important because the reason I want to talk about share buybacks is because of Bank of Nova Scotia. They are planning on purchasing 32 million of their common shares. So buying them back off the open market and just canceling them. So that's getting rid of 32 million common shares. What that means for the stock price. So I guess share buybacks are a really good thing. It's the company itself buying the shares that are on the open market and taking them off the market, which really would increase your slice of the pie. So if you can imagine, if there's 8 slices in the pie and they take out half of the shares, now there's only 4 slices, or your slice just got bigger of that company, if that makes sense, which could increase over time the price of the stock. Of course, there is controversy about that. It's like a way of inflating the stock price, but I don't think that's the case. It just adds more value, or EPS, earnings per share, to investors. It's a way of paying back investors instead of in the form of an actual dividend, where it's just cash payment. But in share buybacks, it's increasing the value of the shares you own. Each share that you have has now increased in value. Your ownership has increased in percentage in that sense. And so share buybacks can be a really good thing. I actually really enjoy them. In fact, a lot of the companies that I look into, when they do aggressive share buybacks, it's actually one of the things that the metrics that I look at is, are they aggressively buying shares back? And how are they doing? Are they doing it with free cash flow? Or are they doing it with loans, lended money, debt? But that's something we look into when we read their financials and things like that. But Bank of Nova Scotia buying back 32 million common shares is about 3% of all their shares on the open market, which you would expect for an increase in earnings per share of every stock. Now, the bank stocks the banks in general have just been on a tear. As we know, Bank of Canada is raising interest rates, and that is always a good thing for banks because that means they make more money. Now, a lot of people probably hate me for saying that. For some reason, I run into a lot of people that just don't like banks. They are now interest rates going up. Yes, I don't like that either. But as a big supporter of financial institutes in certain ways when it comes to stocks and owning good quality companies, I can see where my opinion is disliked about those. And so I'm super happy that the banks are doing well. I'm not super happy that the interest rates in Canada are going up, but it is for the greater good, and in my honest opinion. And you can hate me for that, or you can like me for it. I don't really care. But it's just good for the stock, well, for the company in general. And banks have been doing a great job. They're aggressively buying back shares because they were at a a long point in time there. They weren't allowed to do share buybacks during the whole situation in 2020, 2021. No share buybacks, no dividend increases, and now they have been released of that restriction and are aggressively moving forward with their plans. And share buybacks is just like another way to return capital to their investors in another form other than just a cash paid dividend. And share buybacks are, you don't pay taxes on them. Now, I'm not a tax professional, but it does increase the price of your share over time. And as we know, you only pay taxes on capital gains when you sell. Okay. When it comes to dividends in certain accounts, dividends are taxed regularly. So it's not really a tax efficient way to do things, but a share buyback is definitely tax friendly in that sense. Now, again, I'm not a tax professional, so go seek a professional if you want to figure that out. But other than that, guys, that's pretty much it in the news of the market. It's been a crazy month with news when it comes to stock splits, share buybacks, and all this hype that's happening. We are on a good rally when it comes to the market in general over the past week now. And yeah, I think we're starting to recover from maybe what's happening, but sure, there's still a lot of volatility in the marketplace. So as you do, just be careful. Do your research, of course. And if you did find any value in this video, don't forget to like and subscribe, and we'll definitely see you guys in the next one. Thanks for watching. Bye.